Hello and welcome. My name is Henry Van. I am Head of External Affairs at the Incorporated Society of Musicians, and welcome to this webinar delivered by the ISM Trust in partnership with HM Revenue and Customs. I'm delighted to be joined by Kerry Pope and Des Ryan from HMRC, and today we're looking at the Orchestra's Tax Relief. We're here today because of the fantastic lobbying by the Association of British Orchestras for a tax relief for the orchestras to match that offered to theatre and other parts of the creative sector. And we were strong supporters of the ABO's efforts, supporting them with efforts which helped secure, one, a reduction in the minimum ensemble size eligible for the tax relief from 14 musicians to 12 musicians, and two, a minimum of one rather than four orchestral instrument types being required, which allows brass bands, wind bands and string orchestras to be included. It is also great news for composers, as new music and commissioning can be included in the tax relief. So this is an exciting proposal for musicians, and in a moment I will let Kerry and Des get cracking. But before we begin, just a few technical points. You can't see us, but you should be able to see the PowerPoint presentation. You should also be able to hear us, but we can't hear you. So if you have any questions, please type them in the questions box, and Kerry and Des will answer as many as possible at the end of their presentation. This webinar is being recorded and will be available to view on the ISM's website at ism.org/webinars. So, with that in mind, over to Kerry and Des.
Thank you, Henry. Good afternoon, everybody, and welcome to this webinar on tax relief for orchestral concerts. My name's Kerry Pope, and I'm a Senior Policy Advisor at HMRC. Part of my job is working with Treasury to devise tax reliefs for the creative industries, and Orchestra Tax Relief is the seventh, I believe. Is that right, Des?
Yes.
Seventh out of a long series of tax reliefs that we have. The way this is going to work today is that I'm going to talk to you about the rules. Des is going to talk to you about how the relief works, how to claim, in other words, how to get your hands on the money. We're going to leave the questions and answers to the end. Hopefully, as we go through this webinar, we might actually answer some of your questions. So if some of you have already typed in some questions or are about to send some questions, please don't feel offended if we don't pick up on your particular question, because we may already have answered that. Throughout, I'm going to refer to the term orchestra tax relief. Well, this doesn't necessarily mean that it only applies to orchestras. I'm just going to use this as a shorthand, but as Henry's mentioned, it could equally apply to a brass band, a string ensemble, or some other kind of instrumental ensemble. Okay, so let's get cracking on this. Okay, orchestra tax relief. It commenced this year. And as I said before, it's the latest in a long line of tax reliefs for the creative industries, which started with film in 2007. This relief started on the 1st of April 2006, which means that if you have a qualifying orchestral concert, which commenced after the 1st of April 2006, you can include that. 16, sorry! I've just been corrected. You've not had this for 10 years. You've just had it from this year. This relief is based on the existing creative industries tax reliefs, and you're probably wondering now, what exactly does that mean? This is a relief which is given through the tax system. It's not a grant. This means that there will be rules. And I'm sure quite a few of you are throwing up your hands in horror at the thought of rules, but unfortunately, tax means if you come within the rules, you get the relief. And we have to make sure that this relief is properly targeted at the right people. Reliefs in the past have been very badly abused. So we want to ensure that the right people are getting these reliefs. And that means, unfortunately, that there are rules for this. So some of the rules I described may initially seem a little bit cumbersome, but they are there for a reason. Okay, so how does this work? The first thing that you will need is an orchestral production company, and this company must carry on certain functions. This is a corporation tax relief. So you do actually need a company, and you're probably wondering, what kind of company do I need? So this will apply to a company limited by guarantee, a company limited by shares or guarantee. It also includes charities. And I just want to clear up one common misconception at this point. You do not have to be paying corporation tax to qualify for this relief. You need to be within the charge to corporation tax. This relief isn't given by way of a corporation tax repayment, it's a payable tax credit. We've received quite a few emails in the past from charities saying, I can't qualify for this relief. As we go through this webinar, it should become clear to you that you may be able to do so. So you need an orchestral production company. You'll also need to have a qualifying orchestral concert. We'll come on to that in a minute. And a minimum of 25% of your expenditure must be incurred in the European Economic Area. You're all very lucky that you will not have to apply for a cultural test, because the European Commission regards orchestras as already meeting that cultural criteria. So that's good news for you. Okay, first step, orchestral production company. This company has to be responsible for producing, running and closing the concert. So in other words, you must have a company at the outset doing these things. Because this is the first year, 1st of April 2016 and onwards, you may have, say, a charity which has already started putting on these concerts. You may decide that you want to use a subsidiary company to put on the concerts going forward. You can't switch from one company to the next mid-production, running and closing. So, for example, you might have a charity in place, a charitable company in place at 1st of April. You may produce some concerts in May and finish that run in June. You may then start doing some other concerts in July and use your subsidiary company. This means that the concerts that you have for the charity from May to June will have to be claimed by the charity, and anything else will then be claimed by the subsidiary company. This is entirely up to you how you want to structure your affairs, but it's just to put on note that there can only be one company, and that company has to be responsible for the production from start to finish. The other line you'll see is making an effective creative, technical and artistic contribution to the production, negotiating for contracts and paying for the rights. In summary, this means that you have to be the company responsible for doing the work. So you are responsible for the content, you are responsible for engaging the players, paying their salaries, fees, etc. If you're not doing any of this, then you're not the orchestral production company. As I mentioned before, there can only be one orchestra production company per production. We can't have partnerships. We've had partnerships in the past with the old film tax relief before 2007, and we had a lot of abuse with that. So in order to make sure that this tax relief is not prone to the abuses we've seen in the past, partnerships are excluded. And that's one of the other reasons why we have specific legislation to deal with tax avoidance arrangements. We want to ensure that what you've got is a good product, not prone to avoidance, so it will have longevity. Okay, so second step, you've got your company all set up, you need to have an orchestral concert. So an orchestral concert means a concert by a concert, ensemble or band, consisting wholly or mainly of instrumentalists. Originally, when we first proposed this relief, we said that the instrumentalists must be drawn from all 4 sections of the orchestra, put out a consultation, and quite a few people came back, including the ISM, to say that really wasn't going to work for organisations such as brass bands, string orchestras, etc. So we took on board what was said, and now what we've come back with is an orchestra ensemble band consisting wholly or mainly of instrumentalists. For the avoidance of doubt, the human voice is not an instrument for the purposes of this relief. The concert must be the primary focus. The orchestra must be the primary focus of the concert. So, in other words, you're not a backing band for another performer. So, let's say you have Adele doing a concert and she's got 12 instrumentalists backing her. The audience is coming to see Adele. It's not coming to see the orchestra, unfortunately. And also, you won't be an orchestral concert if you're advertising or promoting goods or services. There's a big difference between that and, say, being sponsored to do a concert. So, for example, you might have something like, let's just say a car manufacturer who wants you to use an orchestra to advertise and promote a particular type of car. It's all branded, it's all about the car. There's a difference between that and actually having the car manufacturer say, I'd like to sponsor you to put on a concert, you do what you want with that concert, there may be a couple of logos, etc., but it isn't about the car, it's about you. Again, this all comes down to a question of fact and degree, and there are bound to be some grey areas. And I would say that if there's anything that you're not clear about, you'll have our contact details at the end, and we'd be happy to advise on any particular grey areas or any uncertainties you have. We've also got a specialist unit in Manchester, which we'll mention again at the end, but I'm going to put a plug in for them now, who are an excellent bunch of people who've been dealing with the creative industries for years and years and years. And again, they're very approachable and are happy to take any questions from anybody. We'd rather you got it right first time rather than come to us later with a claim and have to say, oh, no, I'm sorry. You can't have that. So getting back to an orchestral concert, anything that consists of competition or content or contest will be excluded, and the same for a relevant recording. This is the first step. This is an orchestral concert. It differentiates you between somebody doing a film, a television production, and everything else. However, I'm afraid it doesn't end there. You may have an orchestral concert, but you have to have a qualifying orchestral concert. So there's a little bit more refinement to go through. So a qualifying orchestral concert is one which is performed live before members of the paying public, i.e. there has to be an audience physically present when you're doing that production, and they've got to be paying for it. Now, Des and I are not going to say, how much you have to pay for somebody to go there. I mean, that's up to you. But that's one of the criteria. And there are reasons for this. This is to stop vanity projects or other things like that which are going on, which quite frankly are not really the purpose of this relief. However, and this is another concession that we made to the orchestra industry, if you're putting on that concert for educational purposes, and it's not before paying members of the general public, they'll still need to be live before these people, you may still qualify for the relief. We were told that orchestras quite often do productions for schools, maybe also in hospitals or prisons, which quite frankly perhaps cannot be said to be general members of the public. We will allow things like that, but please bear in mind that for educational purposes, you need to demonstrate this is for educational purposes. It will not be sufficient for you to say, well, that's in my articles of association or in my charitable purposes that I do this for education. We will need to assess things on a case-by-case basis, so you actually need to demonstrate this is for educational purposes. So moving on to the other criteria for qualifying orchestra, there's the EA expenditure. I think that's pretty self-explanatory. But a qualifying orchestral concert is one where the instrumentalists, that's not the human voice, remember, number at least 12. Originally we said 14, but that was another thing, as Henry said, that we listened to you and we reduced to 12. And it's in which none or a minority of the musical instruments is to be electronically or directly amplified. What that means is that if you've got 12 electric guitars, they are being directly amplified. If you've got 12 violins and you have a number of mics set up to pick up the sound, such as we've got a mic at the moment here in the room, that's not directly amplified, that's indirectly amplified. Being indirectly amplified, just having microphones around, is okay. There is, again, another reason for this. We're trying to keep the relief focused on orchestras or large bands and not for stadium concerts, etc. So having instruments which are directly amplified kind of moves us towards the population that we want to incentivize. You need to have a separate orchestral trade. At the moment, I should imagine that all of you are keeping books and records, spreadsheets, accounting books on what income you receive for your orchestral performance and what you're having to pay out. So what you'll need to do is to think about the period of your account and what things that you've got coming in. We call this a trade. So you'll need to know what you're paying out and what you're getting in. And you need to keep records for each concert. However, we were told quite early on that orchestras, unlike the rest of the creative industries where there may be one film a year or one or two television productions, have lots and lots of concerts. So we introduced this concept, this novel concept, which is just for you. It doesn't apply to any of the other people in the creative industries, excuse me, of having an election. So you could have several concerts, bring them all together and treat them as the one trade. So you'll have your books and accounts and you'll have all these details in there, and at the end you won't have to put in 20 separate claims, you can just put in the one. So a qualifying concert series is a very novel concept for us, but it means 2 or more orchestral concerts, all of which a high proportion of which are qualifying orchestral concerts, and we treat that as the one trade. It's up to you what you want to elect as concert series. You can say elect for your autumn season. You perhaps want to elect for your spring season. You may not want to elect at all. If you've got concerts that have fallen out of that election, say you've started, you've done 5 so far this year and you haven't really thought about doing an election, those 5 will still be eligible for relief. It's just that you will have to do treat them as separate trades. So you'll have 5 computations on those ones and then perhaps another 5 or 20 that you've elected to go into the separate orchestra trade. So the election must be in writing or email us, must be made before the date of the first concert in the series. That's why I was mentioning that perhaps you might have 5 that you've already done and you haven't actually done the election. So you can make that election any time up to the date of the first concert in the series. So perhaps you've got some happening next week. You might decide that you want to make the election before then. We'll expect you to include the details for each concert, the date, the venue, whether or not it meets qualifying requirements, 12 instrumentalists, etc. But please do not put anything into that election which isn't a concert. That's the very first leg that I talked to you about earlier. For example, the orchestra is the backing band. That will invalidate the election for all the concerts within it. It doesn't mean to say that you won't be able to claim them, it just means that you won't be able to treat it as one trade. Because once made, the election is irrevocable, so it cannot be added to or removed from. Now, if you've got a concert that's gone you planned to go forward and for whatever reason it's dropped off, that won't make the election irrevocable. Say, for example, you planned it and the venue fell through or the conductor wasn't available, so you couldn't have that. If you have got an extra one that you wanted to include, it won't go into the election. You'll just treat that as a separate trade. So there'll be a separate computation for the extra one. Say, for example, you've elected for a spring season and you've said you're going to do 10 and it turns out that you want to do 12. Well, those other 2 will be just treated as separate trades. So you won't lose out. So this is the third criteria, really, qualifying expenditure. The way the relief works is based on the expenditure that you've incurred. And this is what we would call direct expenditure, and it's expenditure on what you have done to put on this concert. So it will include things such as salaries, rehearsal costs, quite a few things. I know that the ABO has produced a list. You may have access to that already. We will have details in the guidance which will be coming out next year, and you can have a look at that there. But there are certain items of expenditure which are not directly related to the performance and will not be eligible to form the basis of this computation, which Des will be talking to you about very shortly. These include things such as marketing, raising of finance, general legal fees and accountancy fees, storage, the running costs, the actual performance costs. Now, I'm sure some of you are thinking, well, this is a little bit unfair, but this is the same for all of the creative industries. We only allow the costs on directly producing something. So this is the same all the way through. One other point I should mention is speculative expenditure on activities not involved with putting on the concerts. So, for example, you've started a lot of work on a concert season and that's actually gone nowhere. You haven't actually put on the concert. You haven't reached the green light stage of that. That expenditure also falls out. However, if you have done the speculative expenditure, you have got the green light, you have gone forward with it, that expenditure will then be brought in as qualifying expenditure. So, as I've mentioned before, all expenditure must be directly incurred in the concert production and integral to the production process. The way that these reliefs work is that we only look at expenditure that's been actually paid or is the subject of an unconditional obligation to pay. So if you haven't paid something and it remains unpaid at the end of the accounting period, that can't be brought into your claim. But if you do pay it more than 4 months later, it comes into the next period of account and can be claimed later. Again, this is partially anti-avoidance. It's to stop people saying, well, I meant to pay this person £10,000. I never actually got around to paying him, but I will pay him. I think I'm going to be paying him, and you make a claim for it, and then you don't actually ever pay him. Believe you me, we do see things like that. So this is the reason for that rule. As I said before, there are reasons for the rules. So that's my part done, and I'm now going to hand over to Des. At this point, you have to assume you've got your qualifying production company, you've got your qualifying orchestral season, and you've got your qualifying expenditure. Now, Des is going to get into the really interesting part, which is how to make a claim and how to receive money from HMRC.
Good afternoon, everybody. My name's Des Ryan. I work with Kerry Pope on these, and I've been working on all the creative industries tax reliefs back from when they started. So I have a good deal of experience on this. So let's move on how to make a claim. Based on the existing tax reliefs, what happens is you get an additional deduction when calculating taxable profits. So that's over and above any accountancy deduction you would have, and is added to the expenditure that you've incurred, this additional deduction. An additional deduction is set at a maximum of 80% of the total expenditure on producing the orchestral production, The reason for the 80% is because this is a state aid and these are European Commission rules that we can only give relief on a maximum of 80% of the costs of any production. So it's the lower of that 80% or the EEA expenditure. So if your EEA expenditure only happens to be 60% of a concert, then that's what it would be calculated on. Additional deduction, either reduce taxable profits or create or augment a loss which can be surrendered for a tax credit. Now there will be some bands and ensembles out there that are commercial and operate in the commercial world who may be tax paying. You will get a reduction of the tax you have to pay by the way this relief works, whereas those who are in either the not-for-profit sector or are not making a commercial profit will be able to surrender theirs for a tax credit. The rates of the credits is 25% single rate, which equates to a maximum of 20% net when you look at 25% of 80%. Each concert or concert series is a separate trade, and the trade will commence when the production phase begins. When the production phase begins in relation to any concert or series of concerts is not something that we stipulate, so it may differ depending upon how you organise things. It could be that you don't regard the production phase as starting until you've actually engaged everybody that is going to be involved in the concert. It could be that you've been an orchestra or a band for some while and you're going to make a series of elections, and so your trade will start at that point. One of the things I would emphasise is that you must have the same entity that makes the election as makes the claim. So if you make an election for a series of concerts, make it in the name of the entity that is going to make the claim, because if they're in separate entities then it's going to invalidate it. These are a few important points to consider for this relief. Ensure you've got a company incorporated. If you haven't got a company incorporated and you want to access the relief, please do so early. It doesn't take much to set up a company via the internet these days. It's about £30, I think, to actually set up a company. So do consider that. Consider, if you haven't got it, the processes of record keeping that you will need, and the various other things there, the identification of the expenditure, and the timing of the claims, the loss restrictions, and other tax and duty implications. One of the things I will say is that if you owe tax in any other obligation, like through pay-as-you-earn or VAT, and you make a claim for a tax credit, we will deduct that before paying you the net sum over. Notice there's a question from JB on the thing as to what is the EEA. The EEA consists of those countries in the European Union plus Norway, Iceland, Liechtenstein and Switzerland.
European Economic Area.
Yeah. Tax relief is claimed on the company's tax return. Version 2 or 3. You will also need your financial statements, i.e. your accounts that you draw up for the company, and you will need a corporation tax computation. These are all done online these days, company tax returns, so there are no paper returns anymore. Depending upon which version of the tax return you use, and I'll just quickly nip on to the next slide as well and come back, you will see there are a number of boxes on there that relate to what you have to fill in to claim the tax relief. So depending on which version you use, those are the relevant boxes to complete. It's very important that you do complete the relevant boxes, as this identifies the return as being one in which a claim is being made. It is then separated from the general run of corporation tax returns and forwarded to our team, our specialist team in Manchester, who will deal with the claim. One thing I would say is that if you look on the revenue website, where you will find a short version of a corporation tax return, You won't find any of these boxes on there because you need specialist software to access, because this is the long versions of the returns and it's only through those that you will be able to do it. Specialist software is available on the web, or if you've got an accountant, they will always have specialist software that you can use and they will do the return for you. We like some additional information to support a claim. It allows us to see what you're claiming and to review the claim quite quickly and decide whether there's anything that we wish to inquire into, or whether we're happy with the all the production activities and the phases that you do and all the amounts you've claimed in there. There will be things, and I'll talk about it when we come to one of the other slides, where you will have to apportion the expenditure. For example, you're putting on a concert on a particular day and you book the hall for the whole time because you're doing a rehearsal in the morning and then the concert later on in the day, so you've had to pay for the whole day. You will need to apportion that expenditure between the period that you used it for the rehearsal and the period that you used it for the actual concert. So if you let us know what methods of apportionment you've used, as long as they're just and reasonable, we're happy with them. So it might be that you've booked a concert hall for 8 hours because you've got a 3-hour concert and a 5-hour rehearsal, so you claim 5/8. Quite happy with that. That isn't a problem. And any other information you think that's relevant to the claim. One of the questions I had doing this last week was in relation to educational concerts. So there was somebody there who put on educational concerts. What would be relevant there would be the name of the school and the dates, etc., that you put on the concert, so that we were able to see where those exactly took place. This is the further breakdown and the sort of thing that we like to see. These are just a few headings, so don't think that they're the ones that you have to use. It's just looking at the sorts of things that do come up in concerts. So you can see there's rehearsals, and it's divided into the core and non-core. The core is the qualifying part of it, and the non-core is the non-qualifying part of it. This particular one, we said there's no non-EEA expenditure, so it would all be potentially qualifying. And what you would then be claiming on is the total that's the qualifying core expenditure. That would form the basis on which you are making the claim. This is an example. It's just an illustrative example. We're talking about an orchestra here. Let's say this one has made an election for a series of concerts. They're all playing live, no instruments directly amplified, and the income they've received from this is £500,000 for the series of concerts. It can be made up from all sorts of different things. We'll come into some of those that have already had a question on what constitutes income, which we'll deal with at the end. The expenditure up to the first paid public performance is £600,000 in putting all these on, of which £550,000 is the qualifying core expenditure. So what you will have here, and the first part of this would be your normal accountancy. You'd have the total income of £500,000 and your total expenditure of £600,000, and so you would have made an accounting loss of £100,000 on this series of concerts. This is where the additional deduction then comes in on your qualifying expenditure, which from the last slide was £550,000. So you would then add an additional deduction of £440,000 to the £100,000 loss that you already have. That would then give you a total loss of £540,000 in relation to this series of concerts. I stress this is just in the corporation tax computation, so any of you that are using charitable companies that can't actually make a trading loss, the additional deduction does not form part of your accounts, so don't worry about that, thinking, oh, this is going to mean I'm trading at a loss. You're not trading at a loss. This is just a corporation tax computation. So when you've arrived at that final figure, you can surrender the lesser of the available loss for the period, 540,000, or the available qualifying expenditure, i.e. the additional deduction of 440,000. In this case, it would be the 440,000 that you would surrender, and surrender that for the payable tax credit at 25%, and we would pay you £110,000. And that would be transferred into the company's bank account. The aim is to do this within around about a month from the date of your claim, and that's why I say it's important that you identify that you are making this claim in the first place, because if you don't, it will delay the payment of any credit. In this particular instance, you'll see that only 440,000 has been surrendered, so there is still an available loss to carry forward to set against any future profits, should you make any, of the £100,000. That loss doesn't disappear, it's only the part that you've surrendered that is given up in terms of what you can do with it. That's where we are. The administrative number telephone is for the unit in Manchester. They will deal, as I say, with your day-to-day claim. They're very helpful. They will answer your questions. Other than that, come to me or to Kerry. Quite happy to deal with things by emails or by telephone if it's urgent. So if there's anything that you don't understand and you think is going to affect your company, please do come to us before you make a decision, and we will try and help you out.
Okay, any questions? We have actually received some, haven't we, Des? So
yes.
Let's just take the first one. There's a question about income. The correspondent said, I assume ticket sales, but what about sponsorship or grant income for the concert?
Yes, ticket sales obviously will be income. That only includes ticket sales up to the end of your accounting period. So if you've pre-sold concerts in the next accounting period, we wouldn't regard that as being income at that point, because if the concert doesn't take place for any reason, you have to give the money back, so it wouldn't actually be your income. Sponsorship or grant income for the concert, if it is actually in relation to the concert or series of concerts, then it will need to be brought in. If it is general sponsorship, i.e. from the Arts Council or someone like that who gives you a general grant every year and doesn't stipulate any particular concerts or number of concerts, etc., that you have to put on, then that would not be income for the concert or the concert series. So there is a difference between the two there. Second question we have.
Expenditure. At this point in the calculation, does this include all expenditure relating to the concert or concert series, whether defined as core expenditure or not, i.e. artist, concert fees, marketing and publicity for the concert, all administrative costs pertaining to the concert, insurance, etc.? You can do that one.
Yes, the expenditure that you would include, the total expenditure as showed you on the example, which is back on the screen now, is your total accounting expenditure. So that's what you would include, because you would have to produce your accounts in the normal way showing the total expenditure. You will then analyse, as I've shown you in the other one of the other slides, what of that was the qualifying expenditure for working out the qualifying deduction. And that's a separate calculation that you will do, and that then will allow you to calculate the additional deduction that you have. And we'll just go back a couple of slides. It's this core expenditure. The total expenditure that's there would be what was your total accounting expenditure, and the core expenditure and the non-core expenditure would be what you would have as qualifying and non-qualifying. and they obviously will add up to the total, and the same if there was some non-EEA expenditure in there, that would be all part of that. But when you look on that total expenditure there, if you when you add up all the columns, that's what you would bring in the total expenditure in your calculation in your accounts.
If I've just been reminded to encourage you to type in questions. We have got some coming in, but I'm sure a lot of you have some burning questions that you want to ask about this. There is one question which is about, we mentioned state aid earlier. Are there any particular rules around state aid that we need to adhere to? The simple answer to that is probably. For example, we have this thing which is called accumulation of different types of grants and income. And state aid rules mean that we can't give you relief on more than, say, 100% of your qualifying expenditure that you're getting in, or the income that you've got. So if you, for example, have received a grant which is covering 100% of what you're doing, you can't then claim the tax relief because that will take you over the 100% to, say, 120%. I don't think that's going to happen for any of you, but it's just something just to bear in mind. Got another question here as well. Do we need special software for completing the forms? The answer to that, I'm afraid, is yes. You'll find that on the HMRC website. If you type in specialist software for corporation tax, there will be a list of the providers for that. Personally, I can't recommend any particular one of them, but there are the ones that HMRC has seen before and the ones that they can actually tell you to do so. But, excuse me, as Des mentioned before, your accountant should have this specialist software. So do ask them before you go and invest in this.
This question from John says, can you run through the calculation for a charity which does not have a separate company? You said something about there being no additional deduction in this case. There is an additional deduction. A charity is regarded as being a company for the purposes of this tax relief, and it would calculate its tax in exactly the same way. What you'd probably have in the instance, and the illustrative example I've got as the calculation that's there, is that if there was any profit being made by the charity, it would be exempt from tax in any event. And that is where you might have to consider. Charities can run into a problem with this if they become profit making. I mean, if you look, for example, at total income, if that was, say, 750,000, in this instance, it would reduce the value of the tax credit. So what charities tend to do is to set up or use an existing trading company that they have, and have all the expenditure in there, and have the income for the concert actually received by the charity, and then the charity will pay the trading company the sum needed to put the concert on. So that maximises the benefit. If you just use the charity, you may find that you don't get the same benefit, but if you're a small charity, that may not make a lot of difference to you. But if you're a large charity with a number of these going on, you might want to consider your structure. Yeah.
The one thing I'd say about structure, and unfortunately Des and I can't advise on particular structures, is that you should really sit down and seriously consider your own particular facts and circumstances. Some people have been told in the past that they have to set up a subsidiary company as a charity. That it may not be necessary. You may not have to go to that additional expense. So have a look at your own particular circumstances and talk to your professional advisors about this. If you do want to go down the subsidiary route, there are a number of things that you're going to have to consider, and that is things such as making sure you're VAT grouped and making sure that you're keeping to the specific rules for having a charitable subsidiary company. So please take professional advice before you enter into any particular tax planning.
I have another question coming from Peter, saying you mentioned that travel expenditure to venue usually usually used would not qualify. How does this work if an orchestra will have qualifying concerts in London and Hampshire and in Kent? What that's really looking at, the ones that would not qualify, is where you've got a home base at which you put on your concerts. So for example, if your home base was the Royal Festival Hall or it was the Barbican, there would be no travel allowed for your musicians going to those particular concerts. If you haven't got a home base at all and you just put on concerts in various places, then you will always be travelling to somewhere and they will qualify. Perhaps what Peter means here is if they have got a home base in London and then they use also concerts in Hampshire and in Kent, they wouldn't get the travel for their musicians to the home base in London, but they would get the travel for their concerts they put on in Hampshire and in Kent.
Okay, another question. It's been stated that when claiming for a series of concerts, all or a high proportion of concerts must be qualifying orchestral performances. This raises two questions for J.R. What precisely is a high proportion in percentage terms, and can a claim be made for any of the non-qualifying concerts within the qualifying series? It's a very interesting question, Des.
Yes. One of the things that we don't like to do in these is to set arbitrary percentages, because you can find people that are just below the arbitrary percentage that therefore fall out entirely. So if you say that it has to be 75% of the concerts, then if you've got 74.5%, then you're not going to qualify. And we try and avoid that kind of thing. Looking at high proportion, if you do a series of 12 concerts and 2 of them, even 3 of them were not qualifying concerts, then we would still regard that as a high proportion. If you're down to something like 51%, we probably wouldn't be thinking that that was a high proportion. Once you've got them in the series, and then the small proportion of what would be non-qualifying concerts will actually qualify then. So you would get the expenditure for those as well. So you will need to, consider what you're doing when you're making an election. It's entirely up to you what you include and what you don't include, and how long or short you want to make the election, what you want to include or not include. So look at what you're doing and then make your own decisions on that. So if you're concerned about it at all, please contact us beforehand. You can make the election any time up to when the day before the first concert in the series starts. So you've got plenty of time to do it.
We've got another question here from Peter. Concert programs. Can this contain adverts by sponsors? Also, are you able to sell any classical CDs at a concert? I think the simple answer to that, to both the questions, is yes. Anything you'd like to add to that, Des? No, I don't think so. We seem to be getting down the questions. I again encourage you all to start typing in any that you've got there.
Just wondering if you could possibly go over the dates again for which people can apply for this, what dates it covers and when it started. Just cover that off again.
Right. Well, the relief starts from the 1st of April 2016, not 2006, as I mentioned earlier. I think that's going to have to be white. This means, although the legislation didn't come into force until Royal Assent, which was this autumn, it means that the relief actually is backdated to the 1st of April. So if you've started to do some work after the 1st of April, we're looking at expenditure which is incurred after the 1st of April, basically. Expenditure generally before then, I say generally because I think Des is going to pick me up on this point, that's illegal state aid because you haven't got your we haven't got the go date from approval from the Commission to do this. So your expenditure that you'll be incurring from the 1st of April, you'll be counting that and your income coming through from that date, and that will run up to the end of your accounting period. Now, for some of you, I should imagine for most of you, if you're in the not-for-profit sector, that will be the 31st of March next year. So your period of account, as we call it, is from the 1st of April to the 31st of March for this particular relief. So that is what you're going to be looking at as forming the basis for your claim. You'll make your claim after the end of an accounting period, and you'll have up to a year in which to submit your tax return. We tend to see for this relief, somewhat surprisingly, that the returns come in a lot earlier than the year anniversary. That return will come in. I mean, obviously you'll need a couple of months in which to actually collect your accounts, get them signed off by the board, go to your accountant, run through everything with them. You'll submit your accounts maybe, say, in June, with the computations and everything, and hopefully with a fair wind, you'll get your repayment within a month of that. There's one thing I want to actually mention about the repayment. Des mentioned that if you've got any other tax liabilities, we will unfortunately take that away and deduct that from the amount. Now, if we found that there is something in your claim that we're not quite sure about, which is another good reason why you should send us in as many details as you have, what the unit will tend to do is say, they'll look at your claim and say, well, we're happy with 80% of it. So they will repay that 80% and they will retain the 20% while they're discussing with you those other areas of uncertainty. So even if your claim isn't 100% there, we won't hold on to all the money until the inquiry is satisfied.
Yeah, just picking up on one thing that Kerry was talking about there, and that is the cut-off date of the 1st of April 2016. Now, we do recognise that there can be circumstances in which people pay for things in advance, say, for example, rehearsal space or concert halls that they're going to use. And so what we do with that is if you paid something in advance before the 1st of April, but if it is for something that is being used after the 1st of April, we will, in those circumstances, allow that expenditure. That would also be, for example, for a piece of commissioned music. So if you commission somebody to produce a new work for you and paid them some money last December, but the concerts are not going to be put on until this December, then we would allow that as well in those circumstances.
Okay, we have time for one more question, and that's for the purchase of assets such as pianos and maybe vans. The answer to that is that these type of assets are subject to capital allowances and depreciation, so they don't fall within the scope of the relief. However, if something's purchased, I would say for a specific concert project, on the basis that it's unlikely to be used again, then this is allowable. Again, I would say if you've got anything like that that seems to fall under the unusual category, please, please, please get in touch with us as soon as you can.
Another couple of questions come in firstly from John. If a charity has already performed a series and wishes to form a company now, i.e. after the series is run, will you still accept the claim from the new company? No, in those circumstances we won't. The charity would have to make the claim in that instance. And another question from Peter saying, I assume that any expenditure reclaimed would be net of VAT if the company is able to reclaim the VAT on musician's fee or a conductor's fee. Yes, this would be net of VAT, but if you have any irrecoverable VAT, then that can be left in your computation. And that's added to your expenditure. But recoverable VAT, obviously you have to use the net of VAT.
Okay, one more question, one final question, and that is, does an unincorporated association qualify as a production company? Now this question actually came up a couple of weeks ago for me. The answer to that, I'm afraid, is no. Even though in certain circumstances an unincorporated association may be within the Charge to Corporation Tax, it's not a legal entity, so it's unable to carry out the functions of a production company. So if you have got an unincorporated association, I would recommend that you incorporate yourselves immediately to benefit from this relief. Okay, so I gather we've now reached the end of this webinar, and it just remains to say thank you all very much for listening to us. If you do have any further questions, more detailed questions perhaps on your personal circumstances, you've got our contact details, and please don't hesitate to get in touch with us. So thank you and goodbye from me.
Thank you. Goodbye.